Hey guys, how are you? Flicking through the BTC charts. So, excuse a slight delay there. Yeah, so on this little structure at the bottom here on a short time frame, which we interpreted as a incorrectly potential wind up to push through a key structural level of support, the blue line that I've drawn, which is roughly the 6,500. It is the 6,500 level. That's not showing on the scale because I've added the shorts and longs here. Something I'll be discussing separately, and I'll delete them later. But this is the 6,500 key level of significance. In other words, when we called for the fall to 6,073, which would have got you out of your shorts on the first original down leg over here, it was then subsequently an electric fence that rallied the market away quite substantially. So, and then it got tested again here, and that's where we started to form our squeeze. However, we will always be late to the change in trend, particularly if it's just potentially a rally for now. As I've said, the change in trend becomes potential reversal full-blown on the big time frame. We're on the daily time frame, if that wasn't already self-evident. A very key marker is thrown down when we run this 11,800s odd level. Once again, you can't see that right now because I've got the longs and shorts. So let's deal with the longs and shorts, and then we can get proper pricing back up. So the orange is the longs and the red is the shorts. You can see it here, BTC USD shorts. I took Bitfinex, even though this is a Bitstamp chart. It's one of the bigger. What I would like to just illustrate here is that the longs, number of folk longs capitulated. My apologies, the shorts, the red line is the shorts. The number of shorts dropped quite substantially. They were probably at an extreme high for the information we have available to us in review. This said, they're still not at all-time lows as they were here when we were pumping. You can see how that went with absolute parabolic behavior, and at that point the shorts started getting in. They then got a little bit hammered. They were at an all-time high at that point over here, and since then they'd been growing into the second rally to an extreme high point at this level. So they got given a shakeout. But it's also important to note that the overall shorts and longs are growing generally. In other words, it's the scale and size of the market that is growing. Both were trending up. The shorts were going up faster during this down leg period, but the longs have also dropped somewhat since this move. So shorts rushed to close, and longs also took some profits. So you're probably seeing a bit of coming off for both of these. The downside with our short time frame call on this structure was that we were staring at extreme high levels of shorts, which should have been something that maybe we made us a bit more circumspect. Could have been inaccurate there. But in terms of technically, I've gone through this with my premium guys, we'll generally in this pattern structure be short every time, because it would have been calling first setup in a new trend. We had really strong selling momentum and a variety of other reasons that we go into in our premium area. Anyway, the other point is that you get people, some commentators that are going, well, it's all falling wedge and that's it. It's hunky-dory and great. I just want to make a couple of points here about falling wedges. If we were to take it as a falling wedge, it's more descending triangle if you're using this key level of support that I've got at the 6,500, the blue line. But let's just take it as a unique falling wedge that just happens to have a a flat bottom, and we highlight it here. Falling wedges in of themselves don't prove trend reversal. They just they prove a squeeze, a volatility reduction, which we had already highlighted and we were accurate about, that there was going to be an impulsive move. And as I often say, when we're wrong, we're going to be 180 degrees wrong on the shorter time frame in terms of this little structure here. And that certainly was the case. But it doesn't mean the larger trend has necessarily changed. What it does mean is that you're having a relief rally at minimum, but it could be a trend change. I just want to highlight that here in these highly. This was a falling wedge. Popped out. Yes, you got your reaction. Made lower low. This was a falling wedge here. Popped out. return move, made a lower low. This here was a falling wedge, popped out almost as high. You can't target, in my opinion, with high probability on falling wedge. That almost made it as high as that one, while the others didn't. And this one barely fizzled very quickly and fell lower. So they're not reliable for trading. This as an overall structure, down to this squeeze point with a strong candle, that was a falling wedge. You get an initial pop, lower low. So you can't argue with this amount of evidence if this is still a bear trend or a weak trend, and this is history now. So things may have changed, and it could be the falling wedge that becomes the precursor, that and this was the key moment to a new bull market. And believe you me, I'll be as happy as anyone else if that's the case. I just want to be a voice of reason, because people get a bit binary. They go from, oh, bear, pain, 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 whoop, whoop, to the moon, in about 0 to 100 mile an hour in 5 seconds of a boom of a pump. And I want to highlight here, I've used Bitstamp here, but I've done the same on Bitfinex and the others. This volume, while it was outlier high for the short time frame on the hourly, and if you look at your hourlies, you'll see that. Let's just flick to a different chart. There is that outlier volume. While it was outlier high for this time frame under review, it's not highly significant in most instances on other exchanges as well for the bigger time frame. Also, as you can see from this hourly, in terms of our method, the target is made, and you're now grinding and slowing up, and you're bumping into a resistance funnel, in fact, from our history. So I'm going to take you off that short time frame view. We go into more detail in our premium areas on that, if that's of interest to you. But I would certainly say this is not outlier powerful volume. That was far stronger, and that didn't take you away and take out that high. You couldn't on the second attempt, and you came all the way back down from that huge volume there. Obviously, we're later in the bear trend and could be in the beginning of a reversal or recovery trend, or just in an in-betweener stage. This is why I say there's 3 areas: clear-cut bear, clear-cut bull, and consolidation, deciding, resetting up for a continuation pattern to the downside, or resetting up for a reversal pattern to the upside. And we're in that middle period, which I said will be very frustrating for people, because it's an in-betweener zone. There's very little clear-cut category that it sits in. It's not flagrantly bull. Often after, if it is to be called a wedge or a descending triangle, you get a return move as well. The follow through today is not epic. The volume is reasonable for a big time frame view, but not heroic. The move subsequently is not heroic. I showed you on the smaller time frame, you saw that in actual fact on that time frame, it's kind of grindy. It's kind of grindy and running into some traffic over here. So you've had a huge pump moment that's held for now and has moderate grinding follow through. Other coins have actually done better, and they were excessively oversold in some senses, so they've had a bigger relief rally. Ethereum, that was really hard hit, has had a stronger rally, but that doesn't mean it's going to drag Bitcoin up, and it doesn't mean all these other major alts that get their element of relief are now going to drag the crypto market up. BTC is still the big dog. And if it turns around and starts going heavily down again, those higher beta coins that are part of the alt group will turn down too, and they will have catch up to make as well, especially if people get too giddy. So be cautious here. Let's take off those shorts. We've made the point that both the longs and the shorts have tidied up, so the extremities in the polarization is now gone. So to be relying on a short squeeze to continue to drive us substantially higher would not be accurate. A large amount of the extremity has already reduced, and it's also important to note that the longs were getting higher as well as the shorts. The shorts were a little bit more extreme, but they've also reduced to a far more normalized level. So both those lines were trending up. Anyway, so there's your price points. We're at 8,6493. We've got a lot on our more detailed charts of key levels that were on the way down here. So this is up, but remember there is that possibility of a final cold snap. You could get your relative high too somewhere up here. If you got a steep sell-off, there is still scope for a continuation pattern which could see the downside break. Remember, there's been a lot of leaning on this line. We've sold off really heavy across the top and a lot of leaning. The bull scenario, as I said before, is highly impulsive up to the neckline. So you want to see more follow through. There is two options if you go the medium road here. Kind of grinding up, but nothing too spectacular, too fast, nothing too spectacular on the volume. And this is what I said, it already feels like it's doing that one. That is my high probability bet. You could subsequently wind up again and then get really enthusiastic and start taking back previous levels like that. So that is the problem. It can split into a two-way. It would be dangerous in my view to be all in again. 100%. You've got the possibility of a return move to the grind. You've also got this as a split outcome for which only the nature of this move up will be able to tell us. This is your bull scenario. A very bearish outcome would be a strong return move and then followed by some sort of weak grinding and then a fatal attraction for what has proven support a couple of times, and that could also form go very quickly into a continuation down instead of first doing the rally and giving us a higher point up top here somewhere where we've resisted before. So that's my take on BTC. Some were asking the short time frame one, we were happy with generally that we would have done it in most cases for the pattern. This grinding behavior and these steep sell-offs were weak. This is quite a flat bottom. We had a grind line through it. Lots of detail that we've gone through. This could continue though to grind up for a bit, but just be aware on the bigger time frame. In other words, bear markets have to be rolled back across more than just the short time frames. They've got to roll back across the bigger ones too. You'll get some reversal fans that may even say, yeah, you got some sort of shouldering here and this is a head and this could be another shoulder. I wouldn't place too much emphasis on that. Generally, this is a very big right shoulder compared to what could be a left shoulder there. So I think it's more about the squeeze here. It's about the support holding and also BTC showing a real ability to drive itself away from this level, and you become a far stronger bull case only up here at the 11,800s, only up here at the 11,800s, and that requires a $3,700 move, which makes the current $1,000 move look like just a small piece, significant, but a small piece in that puzzle. So what comes next is going to be interesting. I think it's more likely to be on the grindy path than the impulsive path, but who knows, we could be resting or we get a major pump later today, and then we're straight away back on the high road. That's my take for now. Be cautious. There was a lot of squeezing volatility wise, so we knew there was an impulsive move. That's been respected. This pattern is not huge and it's made its target, as you saw, so that could be that. It doesn't have to follow through. So excuse me for that. Finalizing videos all over the place. So be careful. Be careful out there, but it's okay to be cautiously optimistic. We have small percentage of better coins, one or two that I gave in my webinar that have really gone strong, but you would have to be ready and nimble to get out of them quick if we don't like the continuation progress of BTC, because the other alts won't keep running for a long time if BTC starts to look a bit pale and yellow again. So bear that always in mind. In this nervous market, the other coins do need BTC to keep holding up as well, even if they are relatively overperforming. That's it from me. Hope you enjoyed, and we will be doing a new webinar series, Freeview, how to survive in a bear market. Actually, I hope it doesn't arrive too late. We'll see, but at the same time, it'll be awesome if the crypto markets get strong again. Keep your mind open and your eyes open, and we should be around about mid-May going live with those. If you want to get in touch with us about our methodology, themarketsniper.com. Get started, and you can just check if it's for you, and you can mail us on support@themarketsniper.com. We are going to Vegas to serve our US clients. We'll be doing our next event after Vegas in Europe around mid-year. So that's our news. Stay well, be well, and keep an eye on that Russia-Syria situation on our Reset Sniper channel as well, the Reset Sniper, and of course the Market Sniper and the Crypto Sniper for your trading in traditional markets and crypto markets. Speak to you all soon.